Well, if I think about it from Markel position, we've got a global platform, so we're looking at the US, the UK and Europe, Middle East and Asia. We've had 26% growth in the US. We see that continuing. If I look at UK and Europe, difficulty we have in terms of an excess of loss product is we're competing against the large three insurers, which is 70% of the global market. So we are making inroads. We continue to grow on an excess of loss product. Expectation this year is UK and Europe is 12% growth. And then if I move across then to the Middle East, so we look at MENA, that's a more difficult market for us, where we're seeing more fraudulent activity, claims activity. However, the decision in the UAE in December to introduce corporate tax for the first time is coming into effect from the 1st of June. That's going to be a critical factor when we're assessing risk for all corporates there. And then if you look at Asia, which is where the sort of claims have happened, material claims, over the last 4 or 5 years, it's been quite significant. So we're not looking at huge growth in Asia, but if there's one market we do, and I've recently come back from Australia there, Australia would be a market we'd be looking at, which we think is a real growth opportunity. You may not think it right now. I believe energy will still be a key impact, and that's not because of prices are significantly high right now. It's basically because the storage facilities across Europe, and we have many energy clients saying to us that LNG storage facilities across Europe is a key factor. There's no new storage facilities coming online until the back end of 2024, early 2025. So expectation is that energy prices will increase further in Q3, Q4 this year. The reason why it wasn't so bad this year, we had quite a mild winter. So energy, we continue to see an increase in demand. Do you have a crystal ball? Because I don't, but if I did, I'd make a lot more money than I do. But what I would say is we've come on from a benign environment. It's clearly been low claims activity. Our sort of combined ratios coming in around about 60-70% at the moment. So that shows you, including our cost base, where it's very, very low. And that's been the same for the last 3 years. So we are coming from historic losses. If you take the UK, for example, they had their largest ever claims across the industry in 2019 was because of Thomas Cook, the holiday buyer that went bust. And the total claims payment on that alone was 350 million. So that was the biggest ever claims payment in the UK. But the last 3 years it's been super benign, so clearly we expect them to increase.